Also with us is John O'Donohue, head of equities at Cowen Company. John feels the Chinese move was greeted with a little bit too much exuberance this morning, even though it's good news for China. And John, let's start with you. It was a big story this weekend, but we're seeing in the markets now that maybe it was a little bit of overplay this morning.
Yeah, I think so, Matt. It's one of those pieces of news that it was not a matter of if, it was just a matter of when it was going to happen, I would presume. And you know, what we've seen this morning obviously was a fallover from the overnight reaction that we saw in markets overseas. But I think when sort of cooler heads prevailed, everybody figured out that perhaps this is not just the silver bullet to what's been going on. So despite all that, we still have the issues we had in front of us. You know, and I know I mentioned to you guys about Best Buy disappointing last week and Federal Express disappointing last week. So there's a thought in there that the economy will slow down or is slowing down a little bit, unfortunately. And, you know, we've come off a pretty nice rally from about a 12% correction from that 1050 level in the S&Ps up here to sort of the 1110, 1125 level. So we're getting closer towards the top end of the range.
Hey, I want to throw this out to John here because he talked a little bit about the China situation and what that means economically speaking. There is no real growth story in earnings or anything else without China being involved. And one of the things that a lot of traders told me that's being overlooked right now is the fact that if China lets its currency appreciate, that in essence is kind of like a de facto interest rate rise, if you will, a cap on inflation, a slowing down of their economy. Is there any growth story if China itself is basically saying our economy is going to be slow going forward?
Well, I think from the standpoint of the Chinese move, you know, if you think about it from the standpoint of China becoming de facto either the largest exporter or at some stage in the near future the largest consumer, let's say 3 to 5 years down the road, stability within their currency is very, very important. But I think, you know, I mean, that is a controlled economy to the max. And if you think about it, they really need to sort of do things in baby steps here. I'm not so sure that you're going to see a massive revaluation in the yuan, and I'm not so sure that they're going to want to do things that are going to hurt their outside investments, such as their large holdings of U.S. Treasury paper.
And John, what do you think about that? What are you expecting on the housing front from those numbers tomorrow?
I would tend to think they may be slightly softer, and I think, you know, what you'll see probably in this summer is sort of a slowdown in the velocity of change that we've seen over the last year or 14 months or so. I would say this, though, I'm not in complete disagreement that stocks are relatively cheap, but I think there's a different reason why stocks are cheap, and I think it's what I would call government intervention discount. And I think what we've seen over the last 8 months or a year or so is just massive government intervention in a lot of areas, whether it be healthcare, obviously energy is at the forefront now, you know, financial reform and the like. And what we've seen is a reluctance on the part of buy-side investors to really put their money where their mouth is, so to speak, because they're just not sure what the government reaction is going to be. And I think that's a very, very different dynamic than we've seen in this marketplace in a very long period of time, which is why you actually have valuations where they are right now.
How bad do you expect that to get? I mean, we have, John, we've had Art Laffer on the show recently, and he's concerned that the tax increases you see in 2011 are going to push a lot of economic activity forward. For instance, you'd sell everything you have at the end of 2010 to get a cheaper capital gains hit. Are you expecting maybe a double dip because of this?
My background is in economics, but I haven't practiced it in many, many years, you know, sitting on trading desks on Wall Street. But I think the chances of a double dip are quite low, and I would hope that holds to be the case because we have so much stimulus out there. I'm not so sure the Obama administration would be as quick to start putting the brakes on any kind of nascent recovery that we have right now by really whacking some additional taxes. I know what Mr. Laffer says, but I think what we need to be very, very careful of here is to make sure that the sugar high that the economy has been on for a period of time is taken off rather gently than quickly.
Hey, John, what about the flip side of the regulatory angle, especially when you're looking at the stock reaction specifically? Because the credit card companies, for example, just one example today, those stocks are going up because it looks like some of the recently proposed regulations are not going to be as stringent as had been anticipated. And that's not necessarily the exception. That's happened with other types of industries as well. So do you think there could be some relief here when regulations are not as tough as had been feared?
Well, I think if you think of it tactically, you know, if you want to establish your position in a debate, you might take the extreme position, or if you want to establish your position as a policymaker, you may take the extreme position, hoping that after debate and after a lot of negotiation, you get to exactly where you want to be. So I think what we've seen with some of these regulatory moves that perhaps the administration or Congress has taken probably a more extreme view with the fact that they're going to get what they want out of this. So I don't disagree with that.
Hey,